Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about NZD JPY because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice immediately is that the market is currently testing previous monthly resistance, which is now turned support. In fact, from here, all this move to the downside was created. The market broke above the zone with this candle here and this impulse. At that point, all that previous resistance was turned here support. And as we're testing it, we could expect the market once again to reject it to the upside, considering that we have already seen two rejections to the upside with the two previous tests. So here on the monthly, everything seems pretty bullish. We can also notice how, since we have an impulse and correction, if you want to measure the correction after an impulse, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can notice how we have the 0.32 and 50% Fibonacci retracements, which are creating this area here, which is in fact acting as a strong level of confluence of support, because we also have the previous resistance turn support inside of it. So all this area is very strong support and demand, from which we could expect a potential rejection to the upside. Dropping down the weekly, what do we see? Now, from a weekly perspective, we can notice how in creating this move to the downside, the market has also printed this M pattern. Now, in general, after the creation of an M pattern, what you want to see is for the market to create a move to the upside to go and complete the pattern itself at the neckline, which is the previous support turn resistance. So in this case, what we would expect is for this market to create a rejection to the upside to go and retrace at least to this zone here, which is in between, once again, 0.32 and 50%, and has the neckline of the M pattern, which is the completion zone, exactly in the middle. So here on the weekly time frame, we have an upside target, which is currently around this area. We can also notice how at the moment the previous low and also the starting level of the pattern is still holding as support from here. This entire M pattern was created, and at the moment this area is holding as support, from which a potential rejection to the upside definitely seems a possibility. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the NZD, we can see how with the last reports on the NZD, net positions have been decreasing. We went from 1.7k down to minus 12k net positions. So the NZD is starting to get weak. However, the JPY is getting even weaker, going from minus 25k to now minus 81k net positions, with shorts getting increased from 77k all the way up to 116k, and longs getting decreased from 56k to 34k from an institutional perspective. So the JPY is getting weaker than the NZD. And a JPY that is weaker than the NZD is exactly what we need if the market is to create this move to the upside to complete the M pattern, because we need that weak JPY and NZD, which is at least stronger than the JPY. Now, if we go down on the daily time frame, what do we see? Now, from a daily perspective, we can notice how all this move to the downside was created without having any kind of corrections. And no market just moves in a straight line. At some point, you will need the corrections in order to create a downtrend, so a series of lower lows and lower highs. So here, what we could expect is for this market to start a nice correction potentially, to complete also the weekly M pattern that we have previously identified. So there is definitely at least the possibility to see the market create this rejection to the upside and complete the weekly M pattern. Now, how we could be approaching such a move? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside and for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we use in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which you have the possibility to join. And since I have partnered with the Forex broker Blueberry Markets, if you open an account with them from the student dashboard, you have the possibility to get a full refund credited back into your trading account. And if you scroll lower, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I will see you in my next video.